In this video, we're going to look at whether Nvidia is still a good buy after its phenomenal run that it's been on. It's up about 39% year to date in 2024. It's up about close to 1,800% over the last 5 years. So a really strong one. So the question everyone's asking is, after this great rise, is it still a good buy? So first, let's look at some fundamentals and then we'll get to the chart. So one of the reasons it has been so strong, earnings per share increasing an average of 35% per year over the last 5 years. And it's more so what's anticipated for the future. Analysts are expecting even bigger EPS growth going forward, about 100% per year. That includes 64% almost in 2024. So we're seeing these big earnings jumps, and so that gets investors, hedge funds excited, and they want to be invested in a company that's growing that aggressively. Sales also been strong, increasing an average of nearly 31% per year over the last 5 years. And it's also a well-known stock. It's been around a long time. It's considered somewhat safe. That does not mean, that means safe in terms of it probably won't go bankrupt anytime soon, but that does not mean it can't have big price declines. Any stock can, including Nvidia, but it does have a A financial health rating, and that's more just, is it going to go bankrupt tomorrow? Probably not. So the fundamentals say Nvidia is still a good stock. It is growing aggressively. That's what people want. The stock price has been performing great. So let's get to that stock chart. So this is the latest uptrend starting in 2023. Started a little later, or a little earlier than that, late 2022. So it's had a really nice run higher. And we can see that it tends to have these pops higher, where it has a run up and then it chops sideways, and it has a run up and it chops sideways. Let me just put this in regular, and if we go logarithmic, that kind of scales things out a little bit, and we see these periods of chop. This one chopped around and then kind of kept drifting up. Big choppy period here, and these tend to be around 50 to 60%. So this one about 50%, then it starts to get really choppy for a month or so, and then it moves up 50% and it starts to get choppy. This one drifted up then a little bit, off this low, rallied about 30%, then got choppy again. And then this one was on earnings, pretty much popped on earnings. You have about a 50% jump over just before earnings and just after earnings, and then it gets a little bit choppy again. You have these pullbacks. These are about 10% or so, and then it gets choppy again. And then we've had this run now, which is in that 50%-ish ballpark. So while history is not always going to repeat, and we don't know if it's going to repeat again the way this has been unfolding, but there is some evidence that it tends to get a bit exhausted near this 50% run area, so we could see some potential chop coming forward. And we've had pullbacks. Most of these pullbacks are in the 10 to 15% range. Some got a little bit bigger in this choppy area, 18%. Little rally and then dropped a little bit more, so total decline about 20%. But most of these in that 10 to 15%. Lots of little declines in here, but either way it was choppy. This one probably the biggest one of the bunch, about 25%. So if this were to continue to play out, it gives a bit of insight into how this could unfold and where we'd potentially want to look for entries, and it'd be in that 10 to 15% pullback range would be ideal. It does go sometimes a little bit further into that 20-25% range on this occasion, and then nearing that 20% mark over this longer decline. And so that just helps us prepare. These sideways periods can last months, or they could sometimes be just more brief, lasting a month or two. So I would think about that in terms of thinking about entry points. And there is the risk that if you wait for the pullback, the price might only pull back 5% and then keep running. So there's always that trade-off. You have to look at what's your risk and reward and think about the trading from that perspective. But overall, the long-term outlook for the stock still looks pretty good, assuming they can continue to meet those expectations that are out there in terms of what they can produce in earnings. The stock's probably likely to do fairly well. It has a very long history of doing very well. We can see huge rallies over the long term, but also consider that even though it has been a very strong performing stock, it has also had these big declines, 70% there and 60% there back in 2018, the big decline in 2022. And so part of this rally is recovering from some of these big declines. So we can't rule out the possibility of a big decline, even though the stock has been great. It was a great company before, and it was still having these big declines. So just consider that when trading. Overall, long-term outlook still looks pretty good. Like I said, it's been a long-term great performer. In the short term, probably want to wait for some sort of pullback just based on what we've seen in this stock so far.